Hi, this is an example of market context from the E-mini S&P 500 on Tuesday the 8th of November 2011. Now, the prior 3 days we had a balance area which was formed from 1259.75 right down to 1230.5, and that contained all the trading activity. On Tuesday we actually opened up above that balance high at 1263.75, and we looked to move higher based on the fact that it was out of balance. However, that move failed and there was a surge of volume, which then subsided into a test lower. It actually went right down throughout lunch until we then broke back above the balance high. Now, coming into this balance high, you can see the market was testing, and the way I saw that at the time was the market wants to know, are we in balance or are we not? Having not been able to break lower than the 51.5 on the pullbacks, and the volume activity being pretty low, it was quite clear that when that balance high at 1259.75 subsequently did break and volume surged, the likelihood was we were going to then test and make new highs. And that's indeed what happened. So, trading without context, you might have looked to have faded the high, which was 1268.5. You may have got somewhere had you taken it slightly lower, 3 or 4 points possibly, but ultimately the trend was quite clearly up at that point. Now, the reason why this test area is very important is because if the market's saying, are we still in balance or are we not? If you're at the balance high and you are still in balance, you'd expect to see a good amount of activity selling, because there's a good risk reward for a move back towards somewhere in the low of the balance. But as you can see, in this case it wasn't. So trading with context in this case on a break back above the balance high proved to me that the market wasn't in balance and needed to explore higher. So I chose to go with the market, not against it. So that's trading with context. I hope you enjoyed it. Thank you.